Right, jet setters. Here we go. This is my medium to high alert level warning video. Um, uh, no surprise to anyone, right? If you're not on a high level by now, I mean, what are you doing, right? But this is why I started doing these videos back in September, right, which is here, when this correction happened. And I was looking at saying, mate, that is a massive ruction in the markets. It did rebound strongly, right? But as you can see, this level that I had targeted, which was based on a couple of things, one of them was that this was like a real death knell for the market. It has had one last gasp here, and to me, it's looking awful. Now, some of the reasons behind that are obviously, there's the obvious one of saying, well, look at that trend line that is being busted. Notice this is on a log scale, right? If you're not looking at this, it's a big move over a reasonable time frame. You should be looking at a logarithmic scale. If you're following guys that aren't, they're idiots, right? And there's plenty of them out there. So really, this is what I see has been happening. It's pretty clear how the market makes a high, has a bit of a pullback, makes a new high, pulls back, retests that previous high. Okay, so we can see it's done again. New high, comes back, retests the old high, makes a new high, comes back and retests that previous high. Then we go again, right? Goes up, there's a little retest here, comes back, retests that high, and off we go. Off we go in. There's a gap here, right? Because the market never really retested this big high strongly, right? It had a stab here, but the market was very punchy. This is again after the US elections, and there was vaccine news coming out, and it didn't look back. But you can see here it does happen again. Made a high, pulled back to a previous, support level, let's call it that, in here. Quite a strong support level, around that 3,700. Comes up, makes a new high, comes back and retests again. There's a gap here, a big one, which I've always had my eye on, around 4,000. But it does go again, it goes up, new high, comes back, retests that high, which it did a couple of times. New high, can retest previous high, new high, retest the previous high, right? Another way of putting it is, it's a slightly more nuanced version of just a high, low, right? Because these lows, they bounce off these previous highs. So there's those lows there, they bounce off a previous high. There's like lows here that bounce off a previous high, although there's a gap. These lows here, right, in there, bounce off these highs in here. This high here came at a low, bounced off that high there. Now, the thing that's disturbing is ever since this move here, it came back at another test. If we'd follow that same pattern, right, we'd get a high here, which we have. This would have been a support level, which we then bounced off to a new high, then came back and retested this high. Now that hasn't happened. What has happened is the opposite, right? Where in fact, this high here and that low there, instead of forming support, it's actually turned into resistance, right? And it's now tested from the underside, and to me, that's a very bearish sign. Again, in simplistic terms, it's another way of saying, we've gone from a high, low, high, low, high, to a lower low, to a lower high, looking for another lower low. This hasn't happened pretty much in all of this move in any substantive way. So that's why this is, to me, is looking very terminal, because it hasn't done that, right? It's done this. It's unfolding lower. That is a significant deterioration in the trend. As far as where it could go, if we look at some of these Fibos, let's just look at here. We see how it got just on that 23. That really is the first stop. In here, like this, that 61 and that 50, that to me is a likely zone in there. That's what I'm looking at, somewhere in there. And if we look at just the extension of this move from there to there to there, That's the 1-to-1. That's the 1-6. That's the 2. That takes us right into that zone. 4,000 to me looks very compelling. So that is the long and the short of it. In order just to elaborate a little bit, there are, funnily enough, an increasing number of channels that have finally got with the program on yields, right? I've been short these things, right, for months, right? I've been short the Aussie 10 yields for over 12 months now. I was short the 10s, the 3s, the US 2s, and more recently short the bunds. This is a classic, gap fill, right? And it's got more to go. And in this way that in the market is rolling over, we can see it literally everywhere, and that is quite a disturbing sign. I did a video on this before, and I'm just going to do a real one-by-one recap. That's the Russell, right? Long way to go. Let's look at Amazon, right? Some of these stocks. Look, same pattern, right? Let's look at Spotify. These are some of the market darlings. Look at that, exactly the same thing. Big shoot up, turn around, big boot down. Let's look at Peloton. Now, it's another one. These ones are all over the place. Same thing. This is monthly, right? So that's why time frame is kind of short. There's one in Australia, Afterpay. Same thing. Look at this. It is doing the same thing where they've had these big, sharp moves up, choppy consolidation, and they just collapse down again. Some of the big ones like Facebook, Faceplant, where it was, Spacebook. Look at that. It's well on the way to doing it. But they're all the same MO in terms of how these things have rolled over. And whether it's, Amazon, Spotify, Afterpay, Peloton, the Russell, they're the kind of the mid caps, right? It's all the same thing, and it's all been driven by the yields. Even if we look at things like silver, hang on, let's just look at this one. Where is it? Silver XAG. Let's find it. Look at that one. It did it there, right? And it's due to do it again, right? That is one of the reasons why when I look at gold, I'm very skeptical of what's going on in gold, because it's got, to me, exactly the same setup as a lot of these other ones, just on a different scale. While we're on gold, briefly, let's just touch on that quickly. There's this breakout, which I don't believe is going to be confirmed. Depending on if you really want to draw a fine line on here, this is weekly. Gold, you've got to look at weekly. It has not, to me, it has not broken. What's that one? 3 inside up, whatever that is, I don't know. That to me still looks like it is susceptible. You can see there's a lot of work that's been done here, right? There, right? Which is now basically being carried through there. But it's all from the underside, right? It doesn't look good to me. It's still a seller rally. This is stupid money, right? Buying into gold here. Again, gold went up because of inflation and fear. Inflation, think about inflation. Inflation is backward looking. Gold is here because we have had inflation at 7 point whatever percent in the US in the past 12 months, right? That's why we're here, right? Just remember, this is priced, like this, 18 months ago or whatever, this was taken into account the inflation we have just measured over this period, right? It's as simple as that. This move, right, priced in the data that's been over that period, right? I don't know how to explain it more clearly. So that's really what we're seeing in terms of these yields. So we've seen the 2 years roll over very severely, right? We can see the 10 years here breaking a really big long-term trend. The last time it did this, the market tanked in 2018. The market tanked 20%, right? It was quite a sizable correction. This is on the way to happening. I've had a long-term eye on this, you know, to see it going up to like this 320 mark, somewhere around about that. That is where I believe it is headed, and don't just keep in mind that it really is around about in the ballpark of the Fed's long-term inflation outlook. If we go back, then we start looking at some of the other markets, right? So we've looked at the S&P, how it looks fragile. Look at the Dow, you know, like that big sharp move up, lots of choppiness. That is looking ripe for a correction there. If we look at the NASDAQ, it'll be the same thing. You know, I mean, take your pick as far as where it could come back to, right? But it's the same thing that we've seen in, you can see it more clearly in the 2-year notes, the futures, the way in which it's rolled over. You know, this is what happens when you get these sharp moves up, it rolls over, and it tanks, right? So we're just seeing it, it's everywhere you look, absolutely everywhere, you know. That's the Russell. I just showed you the NASDAQ and individual stocks, and it's just everywhere. And of course, the mother of all of them, right? Bitcoin. Look at that, right? That's 11,000, 12,000, right? This is not on a log scale, right? But it's still there, right? Log scale exaggerates it, right? But it's there in all of these markets where you get a big rollover like that. You know, and I think here, you know, it did, if we put it on here, you can see how it broke through that neckline, you know, and it was a pretty healthy correction from the top to the bottom, 80-something%, right? Same here, I'm going to break through that neckline there, and again, from there to there, 80-something%. From here, if it breaks through this neckline, right, we're looking at the same scenario. From there, let's go 80%. 80%. Well, that is like 10,000, 11,000, right? So sure, the log scale exaggerates it, but it is the same thing where you've got a sharp run up and a rollover and a tank. Sharp run up, a rollover, and a tank. A sharp run up, extended rollover, you know, lots of hype, tank. Okay? So, you know, if and Bitcoin really has become a proxy for equity market risk. When it tanks to like 11 or 12,000, that is going to be a massive tank in the S&P at the same time. Look, really, that's pretty much it. I'm going to just do one last thing. When we look at the S&P, let's go back and we're going to look at it like weekly and monthly. You know? So when we look at a weekly, this is going back to the GFC, right? Sorry about all like the noise in here, right? But it is, you can see it's above the trend in there, just above the trend line. Bottom of the trend, my God, doesn't that look ugly? 3,500. That'd be a pretty good level for it to come back to, wouldn't it? Right, see that choppiness in there? Closes those gaps within my little pink zone there. As I've said before with these trend channels, it's like these trends just reflect normality, like normal growth, normal ebbs and flows in the equity markets. When it goes under them, that's abnormal, right? Abnormal. When it goes over them, that's abnormal, right? It's at abnormal levels, right? Just by the fact, just look at it. It's outside of those long-term trends. That's like going back, you know, that's like 13 years, right? When we look at the monthly, it's going back to like the 70s. Now look at it, same thing, right? This is .com, right? Abnormal. Normal, 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 normal. Abnormal. Normal, normal, little bit of abnormality. Normal, 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 abnormal. We are in an abnormal time. So there is that for sure. And just the last thing I'll look at is, again, which I've looked at before, I looked at this at the beginning of the year, right? From the 70s crash to the 87 crash, 155 bars, 484%. Up to the dot-com crash, up there, 155 bars. I mean, it's literally right on the knocker, 620%. From here, let's get that one lined up. Where are we? 155 bars. 155 bars. Let's zoom in. Look at that. 155 bars. 600%. You know, we are, in the scheme of these big three moves, again, from the bottom of the range or tanking up to the top, you know, like a big correction up to the top, big correction up to the top, we are bang on cue for the goose having been cooked. I can't see any single signs of this market going to all-time highs. So I've been short the S&P. I'm still long the Aussie market. The Aussie market has nowhere near the frothing that the S&P has, so that's a bit of a spread trade, and also to catch the momentum on the way down. See, unlike those other shitty channels who want to rope you in with stupid conspiracy theories, I actually tell you my positions. Here's my trading diary, essentially, and why I've got them. So I'm short the S&P, long the Aussie SPY. That's a spread trade, as well as to catch a bit of momentum on the way down. Plus, when I got it back long on the Aussie market, it was down at like 6,800. It was just a really compelling level. I'm still short the bonds. It's in the Aussie 10s, the Aussie 3s, the US 2s, and the 10-year bonds. I've been in and out of the Aussie dollar. I'm out of that at the moment. I've had like a little short position in gold, which I've got out of, just on the back of that Ukraine news in the early hours of Saturday morning Australian time. But I'll probably look to get that back on. I'm still not a believer in gold. And of course, the last thing is, just on the back of my last video, for people that, you know, just to pick up on that fake futures thing. Again, if you subscribe to the following channels that talk about the fake futures, get rid of them. They're absolute gum nuts. CPI, which is a market mover, comes out when the cash market is closed. All US data comes out when the cash market is closed, right? All of it. We basically, all major data, without exception, comes out when the futures market is open and the cash market is closed. So for people who call the future market is fake, they're absolute goddamn knuckles. And also, over the last couple of days, you might have seen the announcements of, you know, Russia withdrawing, easing the pressure on Ukraine. When do they come out? They come out like the open of European morning, right? The US market is still asleep, right? Do you think Russia, when they go to invade Ukraine or pull out, do you think they wait until the US market is open? No, they do it in their time zone when they're ready, right? So all those people that talk about the fake futures market, they are doing you a massive disservice, and they are frankly absolutely unqualified to be talking about financial markets. People who run risk, you run it 24 hours a day, 6.5 days a week. Unless you're just punting around day trading, good luck to you. As far as me, I'm more of a macro trader. You've got to watch these things all the time. If you're just trading a cash market, you're a part-timer, you're a sitting duck waiting to get slaughtered. Look, that's about it for me. Have a good one. I'm going to do some other ones, a bit more on, another one on probably gold. I'm going to do another one on the curve, actually. Someone was asking about the curve. The curve is flattening, bearish flattening. Inverting curves, big precursor to recessions. And the curve has really been flattening. The US curve has really been flattening substantially. Could well invert. Not a good sign, and does not bear well for this one iota. All right, that's right. And then I'm going to do another myth-busting thing on the Wall Street conspiracy theories that drives me nuts. That is like delusional. And another on options, the way in which people just bullshit their way about options, talking about put call wars, and they think the VIX is some kind of leading indicator. They are absolutely deluded. I've traded options like at a street bank, interest rate options, currency options, bond options, structured equity options, commodity options, like, they've been exposed to and traded the lot, right? Anyway, that will come up maybe tomorrow. In the meantime, good luck. Have a good one. Ciao.